All right, in this short video, I'm going to show you why the people that are saying that we're about to repeat 2011 all over again, and metals and commodities are going to have a multi-year bear market. I'm going to show you why they're wrong. There's more to analyzing or trying to spot a major secular top than just chart patterns. There's money flows. And so let me explain why this is not 2011 all over again. So in 2000, stocks had a secular bear market top, and that meant that they transitioned into I guess what was about a 9-year secular bear market where they didn't really go anywhere, and we had two major recessions and two major cyclical bear markets within this secular long-term bear market. So capital wasn't flowing into stocks during this period, but you can see on these this comparison chart, you can see where the capital was flowing. It was flowing into commodities. So the commodity bear market ended, and you could quibble about whether it was in 99 or in 2001. It kind of made a double bottom. But basically, smart money was already starting to exit the stock market here in 99, and some of that liquidity was starting to flow into the commodity markets. And then as we had that crash, this also took down the commodity markets. But then what happened was stocks, even though they had a cyclical bull market, they did not have a secular bull market, and the S&P was only able to come up and make a double top. But in the meantime, all of that liquidity, a lot of it was flowing, all of the QE that the Fed was doing. It wasn't really, it didn't really create a long-term bull market in stocks, but did create a long-term bull market in commodities. So you can see commodities had a major move higher over the next, 8 or 9 years here, while stocks were in a cyclical or a secular bear market. All right, then you can see what happened. We had the major crash in 09, and ultimately that took down everything, margin calls, panic selling and everything. That was the final secular bear market bottom in the stock market. This is the point at which stocks just got too cheap. And it was a top in the secular bull market for commodities. And you can see we had the big crash. This was mostly reflected by the crash in oil. Oil is the main component of the CRB here. But commodities in general crashed, and then you can see what happened. We just had a very long, multi-year, from about 11-year bear market until we got that final bottom in 2020, when everything crashed. Oil went negative. That was the bell ringing that the bear market in commodities was over. And so the Fed and central banks all over the world went on a printing spree. Everything went up, including stocks. But commodities began a new secular bull market. And this was the first leg up from 2020 till, I guess this was kind of right as the Ukraine war started. We kind of get that final parabolic move. And this was such a huge move in a short period of time that what transpired at that point was a long consolidation. And during that consolidation, the stock market continued to go up with some periods of volatility here. This was if I remember right, this was when the Fed was raising rates, and this was the tariffs. But still, the stock market was moving higher. And now, as you can see, the consolidation phase, the multi-year consolidation phase, is over, and commodities have started the next leg up in this secular bull market. Now, I don't know whether that means that the secular bull market in stocks is over. It seems a little bit short to me. I've kind of been on record that I think maybe it might need to go a little bit longer and a little bit further, but maybe not. The war cycle is intensifying and the inflation cycle is starting to intensify. So it is possible that we are looking at a major top trying to form here in the stock market. It'll probably be a top that takes a year or more to form, kind of a one of these rounded tops like here and here. So that's a possibility, but we are just starting the second leg up of a long-term bull market in commodities. So either way, even if there is another leg up, I think liquidity is already starting to come out of the stock market and starting to move into commodities, and that's what's driving this second phase here. Very similar to how liquidity started to come out of stocks here about a year or so early, and we got our first leg up in the commodity bull market, which was then retested when everything crashed. And then the commodity market took off in earnest as the secular bear market in stocks progressed over the next 9 years. So I think that's probably what's happening. So if people are trying to look at a chart and tell you that that this is 2011 all over again, and that the precious metals and commodities are going to crash and be in a bear market for multiple years, they're just wrong. That is not what is happening. If anything, it's the exact opposite. This is a very long secular bull market that's very mature, and there's a possibility that it may be trying to form a rounded top. And if you're not getting anywhere, if this market stagnates, then more and more liquidity is going to start flowing into commodities where things are moving, and you'll get another secular bull market like what we had back here. So this is why people are just wrong when they're just looking at a chart and saying, "Oh, this is 2011 all over again." It is not. We are not in that scenario where the stock market is just starting a secular bull market and all the liquidity is going to be flowing into the stock market. That's not the case. If anything, the liquidity, it's a very long bull market, and if anything, liquidity is going to be starting to leak out of the stock market and go into this second phase of the commodity bull market. Here was the first phase, consolidation, second phase getting underway. I think there's a pretty good chance that this second phase, now there may be a corrective move here. Again, this is mostly oil, but there may be a corrective move here as oil is going to need to take a breather here at some point. But seems like, decent possibility that this leg up could retest these all-time highs before we get another either significant pullback or another period of consolidation. But I think we've got more years to go, probably 2030 to 2032, before this bull market in commodities is over. So you don't want to listen to these people. They're wrong. We're not in the same situation as we were in 2011. The commodity bull market is not coming to an end. On the contrary, it's just starting the second leg up, and I'm pretty sure that the metals have completed their intermediate correction. Everybody's bearish. That's the fuel for the next leg up. And I've gone over in the weekly report the potential that we could get a second stage parabolic phase. It's kind of depend on how quickly we recover the all-time highs as to whether or not I think we're either back in the wall of worry where it's like 3 steps up, 1 or 2 steps back, or we've got another parabolic phase, and this was the midpoint correction between the first parabolic phase and the second parabolic phase. So again, I've covered that in detail in the weekend report if you want to see that analysis. But this is not 2011 all over again. Far from it. We are just starting the second leg up in a commodity bull market.